The U.S. stock market has seen several whipsaws over the past 2 weeks, as traders are largely concerned about the rise in inflation.
The general qualm is that strong inflation and ongoing support from stimulus relief packages will trigger the Fed's immature action, and that is a rise in interest rates. Stock traders and investors believe this could derail the U.S. economic recovery.
Welcome to our channel. On this channel, we talk about personal finance, positive lifestyle changes, and entrepreneurship, so that you can move from the life you have to the life you deserve.
Before starting this video, I would like to request you to please subscribe to our channel and hit the notification bell so that you won't miss any of our videos. So, let's get started.
This fall was primarily on account of the U.S. government bond yields going up. The U.S. government sells bonds which pay a certain rate of interest to finance its fiscal deficit, or the difference between what it earns and what it spends. Meanwhile, on the other side of the globe, BSE Sensex, which is India's most popular stock market index, fell by 1,939 points or 3.8% today to close the day at 49,050 points.
And if you are wondering that why did this happen? Here is your answer.
Stock prices in India are very closely related to how stock prices move in the United States a day earlier. Yesterday, the Dow Jones Industrial Average, the premier stock market index in the U.S., fell by 560 points or 1.75% to 31,402 points. The 10-year U.S. bond yield went up primarily because the investors expect inflation in the U.S. to go up in the months to come. The belief is that as more and more people get vaccinated and go back to doing what they have always done, eating out, shopping, taking holidays, borrowing, and generally buying stuff, the consumer demand will go up. The supply will not be able to keep pace with increase in demand, leading to more money chasing the same set of goods and services, and hence an increase in prices in general or higher inflation.
A higher inflation will mean interest rates across the economy will go up as well. Investors do not wait for things to play out. They start factoring in their beliefs and the possibilities of various scenarios playing out by acting on it immediately, with returns from fixed income investments which offer an interest likely to go up and investors sold out of stocks. Now, let's talk about the Fed connection.
The chairman of the Federal Reserve Bank has tried his best to assure investors and traders that the Fed is not even thinking of increasing the interest rate, a point he emphasized in his Today testimony this week. Rumors abound in the market that President may actually push for another larger stimulus round after the $1.9 trillion package. So, stimulus support is not leaving anytime soon, and the Fed has assured the players several times that the U.S. economy is far from reaching full employment. Yet, even that doesn't mean the Fed is going to tighten monetary policy. Thus, the stock market's current tantrum nothing more than a sign of a healthy correction.
So that is it for today's video.
If you like this video, don't forget to hit that like button and share with your friends. Always remember, a single share might change someone's life.
Also, don't forget to subscribe to our channel and hit the notification bell. Follow me on Instagram. Until next time. Thank you.